Alright guys, so today I want to talk about standard deviation and how you can benefit from it and how you can change your trading, because it can help you a lot. And if you're interested, just watch the video. So at first, I just want to start with some basics. So what is standard deviation, projection? I would say it's a measurement tool for used to forecast future price levels. So it's based on analyzing a defined price range. I will come to this and that's what the most important thing for it for me. I'm using it in connection to power of 3, or we can call it AMD. So accumulation, manipulation, and distribution. I prepared one example here, so you can see accumulation, then manipulation. This time, this example here, we have a bullish example, and then distribution, so we go higher. And what we use standard deviation for is we measure the price lag down here, so that's the manipulation lag, and it can give us a really good forecast. And you can see, I will go through some examples later. You can see it really works. So it can really help you to find a target, or also you can know, okay, when can a move be over? So at first, what can we use standard deviation for? So at first, I would say we can use it to find potential targets. So when we enter a position, we can use it for our take profit placement, but also when we are waiting for an entry. So for example, the price is going down, but we want to look for longs based on our buyers or stuff like that. So we can also use it to see, okay, when could this move be over? And I think the first, or the most important thing is, I think I should show you now how to, what kind of settings I have. And for this, I'm always using TradingView. So you can see it here, and that's what I do. I'm using the Fibonacci tool, and you can go to settings here, and then you can, just click here on the settings. And we are using the settings -4, -3, -2.5, -2, -1, 0, and 1. And what I would recommend to you guys is to save the settings, so you don't have to do it every day, because I think most of you guys also use different Fibonacci levels for different analysis. So you can just, next time you can click to your settings and choose your standard deviation tool. So it's a lot quicker and it saves a lot of time. And these are the settings. Just copy them. And I think the first or the most important thing is what I should show you guys is where can we use it? So what I'm going to do most of the time, and that's really basic, I'm just looking for the manipulation lag in a move. So for example, but this only works when you only trade through a specific time. So for example, for me, I don't trade every day. So I trade every day, but I don't trade every hour. So most of the time I'm starting to trade at 9:30 New York open. So most of the time you have a little manipulation there. So what I'm looking for is just, okay, which low cost, for example, in the bullish example here, which low cost this up move. And what I do is I just go to the last low and look, okay, which manipulation point caused this little low here. And you can see here in this example, we can use this point here. And then you can see we get a projection to the upside. But now you can see we have a lot of different zones here. We have the -4, -3, -2.5, -2. And people ask me always, okay, how can I use these zones and what should I do here? And I'm using a really simple approach, because I don't want to participate or analyze every different level here, because that's just too much. And most of the time price also can ignore a level. You never know. What I do when I'm really bullish, for example, this example here, price goes up. When I'm really bullish, I'm always targeting the -4 level. And you will see, when you're right, price always hits this level. And when I'm bearish, so sometimes I take trades against my bias, I'm targeting the -2 and the -2.5. So this is also a reversal zone. And now it gets really interesting, because let's imagine you decided to not take a long here, but price still went up. You can wait for price hitting the -2, -2.5, because your buyers are bearish. You can look for shorts here, and now you can combine this with different elements. So for example, now you can also use premium and discount, and power of 3, and this is exactly how I use standard deviation. But I have to admit, I'm not a big fan of just using standard deviation blind without alignment. So what I really like to do is to look, okay, is there anything overlapping? What do I mean by that? I'm not using the -4 level always as a draw on liquidity. I'm looking that the -4 target is, maybe on the same level with a, old high or old low. So a liquidity target, fair value gap or something, just an object that I can target. Because most of the time I'm not using the -4 level alone. I'm always looking for, okay, maybe there's a low or high on the same level. And that also gives you, a lot more confidence in the setup. And all right, so if you have any questions about this, just let me know in the comments. But now I want to show you some examples. So I prepared this chart here, and this was literally this Friday, so it's quite new. And what we can see here is NQ, and we created a top here, and then we had this really large downfall here. And I have to admit I missed this short, but I think it's still really interesting because you can see we had SMT here, and now we want to use standard deviation to predict, okay, how far can the price drop. And we can use the standard deviation tool from this high here to this low here, and we can see, and that's why I love standard deviation. You can see we almost perfectly hit the -4 level. Like you can see, we hit the -4 level and then price started to bounce here. So let's imagine you missed this short here. Same for me. You still know, okay, maybe I should not long all the way down here. You can save a lot of money. And that's also a way how I use standard deviation to also stay out of the market, to know, okay, the big manipulation already during New York happened already. I should stay out here. Like I think we can also just accept the fact on some days, okay, we missed the trade today, we should not trade here. And that's really, really nice. And this also saved me a lot of money. And now I can give you a second example, because now we can see, okay, we hit the -4 target here on the down move. Okay, maybe now we can just look for longs. And now we need to find the manipulation leg, that will cause the up move. We can just look here, okay, let's say this is the last manipulation move down. So we can just project our standard deviation here again. So the level 1 belongs here to the downside and the 0 to this high here. And we can see when we go now to the chart, we can see, I mean, this was already the New York PM session. So it took some time to hit that level. But now you can see we hit the -2 and the -2.5 zone. So this is the zone where you can also potentially look for shorts. I mean, this was the Friday close, so I would not short this here, but just a nice example. So just to repeat that, the -4 target is important for us if you look for full swings and have confidence in your buyers, and the -2 and the -2.5 zone. So that's the full zone here. You can look for potential reversals if the price trades against your buyers or against a target, which makes no sense. So this is how I use standard deviation. It's quite simple. And okay, and now I also prepared a short example. You can see it on my chart here. I think this was Tuesday, and it was in the beginning of September. And you can see we had a really strong sell day here. Like you can see already during Asia and London, we had a really strong sell-off. And then you can see from the New York session, after the open, we had a small pump to the upside. And I was actually placed in a long, but I decided to close my long position really early because there are two different reasons. So at first we hit the premium zone here. You can see it in red. This is the premium zone. You want to look for shorts here. And also because we actually had a really strong sell-off the whole day. So I was like, okay, maybe this will sell down later again. So what did I do? I was looking for, okay, where did price manipulate lower to cause this up move? So you can see it here on the chart. I placed already the standard deviation. So this time I did it from here. I think I have to admit, this example is really hard because most people would draw standard deviation from here. But I decided to use this green up closed candle because it's still a little up move before we created this low here. So this one here is more realistic for me. And you can see here again, the -2 and the -2.5 zone perfectly predicted the reversal. So let's say this again. when you're not full confident in your buyers and you say, okay, maybe this price can sell down later, for example, when you're in a long, you don't really need to target the -4 level. It's only when buyers and price action are in the same position. But if you're trading against your buyers, you should always close your positions or target the -2 and the -2.5. So, and you can see perfectly, this was also perfect entry for shorts. So let's say you wanted to look for shorts. You can see, okay, we hit premium here. We hit the -2, -2.5 zone. Okay, maybe I should look for shorts. And you can see this would have been a perfect trade because we can see, okay, 10 a.m. candle opened up here and it swept the 9 a.m. high. So this is also where power of 3, I think you guys know this, I trade power of 3. You can see 10 a.m. high swept the 9 a.m. high. So I always trade hourly candles. And now you can look for shorts, maybe just use the first inversion fair value gap. That's my entry method. And now you can just look for shorting this down, and you can see this perfectly happened. We hit the low again. And also here you can use standard deviation to predict, okay, where could price go. And in this example here, it's really hard to be honest because I don't really know which manipulation level we can use. But for example, when we use this high here, we can perfectly see we almost hit the -4 level. I mean, not perfectly, but but here also, I think I already told you guys this. You should never just target the -4 level. You should look, okay, are there any old lows or any fair value gaps I can target? And this time here, you should target the low. Obviously, you should not place your TP perfectly on the -4 target. You should look in this area around here. Okay, where can I lay my take profit order? Alright guys, so I think that's it for the video. If you have any questions, just let me know in the comments. I'm really happy to help you guys. And I think there will be a second part. So if you haven't subscribed yet, I think I would recommend you guys to do this. And see you next time.